Okay, good morning, everybody. It is 10:31. We are getting started with our Mortgage Monday call. Today is the March 11th installment. We are officially past the Super Bowl, past daylight savings time. We've gotten the emails that were sent back to us with the out of office and the notifications that we sent out to remind everyone to turn their clocks forward weekend. So hopefully those of you with kids made it through the time change okay. I certainly know how that's like. And again, thanks for joining us. Aaron, you want to go ahead and introduce yourself and we'll get rolling?
Yeah, good morning. Aaron Wise here. Sorry, I got a little stuffed up today, but yeah, I'm just excited. I feel like the sun is out. There was a lot of people out this weekend, so I'm excited to dig in and kind of see what happens this week. So I think we got a good week on deck. So
The sun is shining. We got some love from the market on interest rates last week, which we'll talk
yep.
about in a few minutes here. We've got St. Patrick's Day coming up this weekend, so hopefully that sunshine continues. And once again, our Mortgage Monday call is a quick hit 20-ish minute call just to talk about things that are going on in the lending space as it pertains to residential real estate. Super grateful for all of you joining us here today. Again, if you have questions, scenarios, war stories, successes, we want to hear about them. So throw them into the chat, or we can unmute you if you want to come on the call here as well. But let's go ahead and get rolling. So we will send out the recap as well as the invite after the call, but wanted to bring to your attention, we are hosting a virtual reverse mortgage seminar tomorrow at 1 p.m. Central, okay? Aaron, honest question for you. Until we started working on this, were you aware that a homeowner could use a reverse mortgage to purchase a property?
No, not for a purchase. I thought before we got all into it that it was refinance only. 100%.
I thought the same thing,
Yeah.
right? So it's a unique time in the market right now because most companies are seeing the opportunity with reverse mortgages and they're building out reverse mortgage specialist teams. And we've got one here at Guaranteed Rate. There's some at our competitors, I'm sure. But in particular, if you have, someone that's looking to downsize, okay, that's in their later years and they're eligible for a reverse mortgage, you got to be 62 or older, okay. A big help to inventory and the market as well is if we're selling the home they're currently in, using the proceeds to purchase the new home with a reverse mortgage, it frees up that inventory, allows that homeowner to make the trade, and they can actually make that money get paid back to them monthly or in a one-time installment using the reverse mortgage product. So the invite will go out once we're done with the call. We've sent it out before, but we'll get it out to you again, 1 p.m. Central tomorrow. So be sure to tune in, and that will be recorded. We will send it out after the call as well. Anything else you want to talk about on the seminar or reverse for right now, Aaron?
No, the only comment that I have is if people that have been in this business for, a total of 40 some years don't know that, there's a whole audience that doesn't know that either. So it was pretty eye-opening actually, to be honest. So
Agree.
yeah.
Agree. And I feel like the key word right now is education for our clients, ourselves, right? The market is a evolving ecosystem, and the only constant is change, right? So we'll get into more education pieces in just a few minutes here. Want to talk again about Home Ready First, which is our closing cost credit. You can get up to $8,000 to cover closing costs and prepaid items with this program. And there's something unique about eligibility. So there is no income cap on this. You do have to be a first-time buyer, or at least one borrower has to be a first-time buyer. And you cannot own any other real estate at the time of closing with this program, okay? But Aaron, why don't you let people know how we can determine if they're eligible for the $8,000 grant?
Yeah, super easy. First of all, how am I doing on this background? It's a thumbs up.
Thumbs up. Quite sunny where you are. I like that.
All right. It is a little bit. Yeah. So short and sweet on this. All we need is a renter's current address. So if you're working with somebody that's looking to purchase, you can just text me over an address to say, hey, can you check out, 711 West Gordon Place, Unit 202. We pop it into our system, cross-reference it on our handy-dandy little spreadsheet. And if the borrower is a first-time home buyer, and if it's eligible in the spreadsheet, they get up to $8,000. Just had one come through this weekend. There's a nice little pocket in Uptown for those of you who do any business in Uptown. The ironic thing is you don't have to do any business in Uptown. You just have to have a buyer that currently lives in Uptown. All right. So it's totally shifting even my vocabulary that I just used right there. Do you do business in Uptown? It doesn't matter because that's just where somebody needs to live. They can be buying $1 million condo in Gold Coast. So there's a nice little pocket up there next to the Target, if you're familiar with Uptown at all. I think it's Truman College is up there too. And just had one come through this weekend. Customers making 150 grand at Salesforce, putting 20% down, gets up to 8 grand from us. Current rates on that were 6.5. And if he was putting less than 20% down, the PMI is, I don't know, probably 60% of what normal monthly PMI is. So the guy's ecstatic. Perfect scenario.
Yeah, it's a very powerful program, because the challenge in programs like this is typically there's a loan amount or a purchase price limit. On this one, there is not. There's usually an income cap. So the person that's making 150, 200K a year is typically not eligible. But in this program, they are. Okay. And to me, the real upside is that we can market directly to these people. So if you're on this call and you're considering, hey, maybe I can leverage this program, who do I know that's out there in my database that would benefit? Or, if you're looking to market to this program with postcards, door hangers, stuff like that, reach out to us. We are planning to do exactly that. And so if you're looking to co-brand something or go on in a marketing initiative, we're getting started. So don't hesitate to reach out to us. And again, typically these programs are based on where the subject property is that they're purchasing, and there's restrictions. So it's tough to actually market to the individual that can benefit. But this program is unique. We know exactly the addresses in the census tracts that are eligible, where they're currently living. So we can do those blasts, postcards, marketing activities to try to get in front of them and then educate them that they can go buy real estate anywhere and use this program where it's maximum of 8,000 for closing costs and prepaids. How it works is 5,000 actually comes from Fannie Mae. This is a Fannie Mae program. There's less than 10 lenders nationwide that have access to it. So if your customer is using wherever they have their checking account for their pre-approval letter and getting their mortgage, they're not going to have access to this program. Okay, so make sure we let them know that. And then 1% of the loan amount actually comes from us as the lender with a total max of 8,000. Okay, but very, very powerful in terms of what we can do with interest rates, closing costs, and put the buyer in a great position using this program. So reach out to us with questions. Moving on to interest rate activities. The Fed met last week. They did not cut rates. What did they talk about, Aaron, on last week's Fed meeting?
I mean, to be honest with you, it was a little bit of business as usual, and then it was for the most part, we're looking forward to the next meeting or two, right? That was pretty much, it was kind of kicking the can down the road with, I don't know, a little bit of, I'd say it was a mixed reaction. That's kind of what the headline said, right? So I think in the end, the underlying theme is still what's going on with jobs, what's going on with inflation. That's the short term. We're seeing those reports, come out month after month. And then based off the results of those reports, that's what's driving the Fed to make their decisions. And then that's what's going to drive things moving forward. So it's a chain reaction here, but it starts with what's going on with jobs and inflation. And anybody can see that if you just Google up, when's the next jobs report coming out? Or if you're on my, lovely text messages I send out all the time, I'm usually trying to give you a good indication of when those reports are coming out. But those are driving the Fed's decision more than anything. Would you agree?
I do. And so, specifically what they were talking about last week is they don't want to, increase inflation by cutting rates right now. Okay, so inflation and the job market are the two things that they're really looking at. As a general rule, the Fed does not want to lead or spook the market in any way, so they want to be extremely deliberate, probably too deliberate on stuff like this. If you remember, when they started raising rates, they probably waited too long to start raising rates. Then they went bananas raising rates, and in my opinion, probably raised them too much too quickly. Okay. But they had to slay the dragon of inflation. Okay. Inflation is way down. It's not at their 2% target, but that's within striking distance. But the Fed is very deliberate. They're probably too slow to act. They're probably too slow to change course, but they don't want to throw a wrench into the market. They want to be entirely predictable with this kind of stuff. So Aaron's exactly right. It might not be till summer or so until we see that cut, but they're looking at job numbers. Job report that came out this past Friday was better than expected. However, they revised some of the numbers in the January report, which came out the first week of February. So in the unemployment percentage actually went up a tick this past Friday, even though we got a stronger jobs number than we anticipated. Okay. The bottom line for all of your clients is that we're not going to be able to time the market when it comes to interest rates. Okay. It's hard enough to time the market on a particular property when it comes to price points. If you're trying to do interest rates at the same time, you're doing yourself a disservice. That client is doing themselves a disservice. So, like we've been saying for the last 2 years, make the purchase, wait for the refi. You can always refinance your rate, but you can never refinance your purchase price. Okay. We did get slightly lower rates as a result of a 2-3 day rally last week. What did that do to mortgage applications nationwide, Aaron? Do you have that in front of you?
I do not have that in front of me, but I'll tell you, we get a boost every time that happens. It's a pretty tit for tat scenario there, right? So, I mean, affordability is everything right now, right? So, anytime you get any kind of a decline like that, you're just going to see it. I feel like an immediate boost, and I think where you're going with this is just you absolutely do have people that are still sitting on the sidelines, right? I mean, I don't know. I was running some scenarios over the weekend, and we were still. I mean, buy downs are still a thing, guys. I had a temporary buy down go under contract, and the differential between like a 7.25 and a 5.25 was, I don't know, 400 a month, 500 a month. And that was enough to get somebody excited, give them a payment that's going to be lesser for the next year or two. So anyway, little tangent there, but affordability is the name of the game. And while we're kind of doubling down on that affordability piece, just think if you're a buyer and you've got an extra $8,000 to use and you can use a huge chunk of that to buy your rate down. I don't know. That's just a no-brainer scenario for me. If you're coming to the table at a 6.5 already, and you've got 8 grand to do whatever you want to do with, I don't know. I'm using a vast majority of that towards discount points. I'm going to get that sucker in the 5s. It's way easier to swallow an interest rate that starts with a 5 than it is with a 7. So, just throwing that out there. That 8 grand is just. I haven't talked to anybody that's getting and qualified for the 8 grand that didn't go out shopping this weekend. Let's put it that way, right? So if you want to get I mean, we all want motivated buyers and motivated sellers. So if you want to find a motivated buyer in about 20 seconds, tell them they're qualified for $8,000, no catch, no surprise, no nothing, and see how fast they're hopping on their app looking at properties. So.
Yeah, I love it. So in terms of motivation, we'll talk about, competitive bids and how to leverage your lender to win those in just a minute here. But before we get there, I wanted to talk about these assumable mortgages that seem to be getting some clicks and some articles, as well. So, government-backed mortgages, so FHA and VA have a clause that they have the right or the ability to be assumed. Okay, so if a seller has an FHA or VA mortgage, it's possible that that buyer for that home would be able to take over that mortgage and have the assumption given to them. Okay, the benefit here is that interest rates are lower had they gotten that mortgage in the last couple of years, more than a couple of years versus today. Okay, but I feel like this is a clickbait topic. Okay, because despite FHA and VA allowing for this, the loan holder or the investor that services that mortgage also has restrictions and overlays. Okay, and yes, if your seller has a VA or FHA mortgage, you can put on the listing that it has the ability to be assumed, and your listing's probably going to get a lot more attention than it would normally get with that language on there. However, to pull off an assumption like that, it takes 60 to 90 days. There's no guarantee that the new homeowner is going to get that approved. The homeowner, the buyer is going to have to come up with the difference in cash. So if the property is listed at 500, the current mortgage is 225. Even if you hit it out of the park and you strike gold and that assumption gets approved, your buyer still has to come out of pocket for $250K or find a way to go borrow it somewhere. Okay, so this is something where, hey, we're not usually talking about this. This is a shiny object that's out there right now, but I feel like it's clickbait. I feel like it's great to garner attention and interest, but these assumption requests hardly ever land and have hardly ever come through. I would love if they did. Okay. But Aaron, do you see anything else out there? Is there buzz with your agents or clients about stuff like this?
Yeah, I mean, I get probably a question on that every 2 weeks with FHA and VA. I got it this morning actually. So somebody wanted to buy a property and seller at a 2 3/4. VA rates actually are at a 5.99 right now. So it wasn't actually as bad as what they had thought. They thought it was like 7. Still not 2 3/4, but 5.99 still, it's pretty solid, by the way. And so yeah, the whole trick is if you've got a couple $100,000 in the bank, or if the current loan amount is close to what that new price is going to be, then it could be the shiny object, could be a reality, assuming that the current servicer is going to play ball. But you're right. There's 2 pieces of it. Is the seller's lender going to play ball with you? And do you have enough cash to bridge the gap? If the answer is yes to both those things, then you've got something. But what's happened is just think about your listings right now. How many people are selling close to the same price that they bought their place at 3, 4, even 2 years ago, right? Even if you did 100% financing 2 years ago, you bought a place for $300K, so bring those scenarios to us. We're happy to talk to you about it. We can't help as far as getting the current servicer to give you any data. We can walk you through, you know, the right questions to ask, et cetera, et cetera. But the key is going to be, can you bridge the gap somehow? If you can, you might be in business. But if you can't, there's nobody out there that's just dying to do a second mortgage behind, you know, a first lien. That's the whole trick. So
Yeah, so stuff like this will get you views on Instagram. It's not going to get you a whole lot of closings in our experience, but by all means, bring the scenarios and questions to us, and we'll help you any way that we can. Just wanted to touch on
Yep.
that. Last but not least here, we want to talk about how to leverage your lender to win competitive bids. Okay, so last month or so, I've been getting copied on offers on a Saturday or asked to reach out to the listing agent when there's competitive bids. We're more than happy to do that, okay? But we wanted to talk about ways that you can use your lender to actually land that competitive bid, okay? So we've talked about it before. We have a power bid, fully underwritten approval program where we give a commitment letter rather than a pre-approval letter. And that allows the customer and you as the agent to leverage your buyer's offer and compete with cash. Okay. This takes a little bit of extra work up front. We have to get the file through underwriting before we issue that approval. Okay. But if we do that, we can close in as little as 10 days. The buyer can choose to waive finance contingency since we've already been through underwriting, okay? And if there's any appraisal gaps that are negotiated, we will get the file rolling and get that appraisal back within 5 business days before attorney review wraps so that they know what that appraisal looks like before they close attorney review, okay? Again, if your buyer is using whatever bank has their checking account for their pre-approval, they're not going to be able to get this level of service, and they're putting themselves at a disadvantage. Okay. Aaron, anything you want to touch on here before we go deeper on this?
yeah, I could go all day on this one. But I'll tell you what I'm seeing right now is I'm seeing a lot of separation with the top agents, and most everybody on this call is one of those people. I just feel like the top agents are continuing to win the multiple offer scenarios time and time again. And the ones that aren't are losing those multiple offers time and time again. So there's a serious kind of a set of behaviors that are happening or taking place within that multiple offer scenario that are allowing them to win each time. It's not just because they sell a lot of real estate and they just win based off that, right? It's not reputation alone. But the one thing to get that conversation started is, I'll tell you, if anybody calls me and says, hey, we're going to put an offer in on something, can I get a letter? And they don't want me or they don't ask me to reach out to the listing side, I never end up hearing 2 days later, oh, hey, we ended up getting that deal. It doesn't happen. Whereas if I am reaching out and I am making that call, and I am having that, 2-3 minute conversation is all it takes, I'd say 80% of the time I'm winning that, or we as a team are winning that contract. So I'm not saying that it's me personally, as much as I'd love to take credit for it. Maybe it's part of it, wink, wink. But I think just that process of showing the communication, showing that, okay, we did the due diligence. We know what the hell we're doing. We didn't start doing this yesterday. Let's bring it together. We're all on the same team here. Let's get this damn thing done. I think 80% of the time, which those are good odds right now when you're up against 5 other people, that can be the difference. So I'm sure you're seeing the same.
Totally agree. And just a quick story on it. I have a client right now that used to be a realtor, so she knows enough to be dangerous, but she hasn't been a realtor for, probably 15 years. Okay. And she's out there competing on, multiple properties with multiple bids, and she lost one. And she said, well, you know, they had an appraisal gap. They went above list price, and I just would never do that, you know? And I said, okay, well, let's talk about that, right? So this is an education piece, right? Where I said, should you agree to an appraisal gap? We'll rush the appraisal, we'll have it back within 5 days. And she says to me, well, you don't order appraisal until you wrap attorney review on this kind of stuff. And I said, yeah, if it was 2010, that's how we would do it. But that's not how we're operating today. And again, you're in the driver's seat here. I'm just here to give you options and let you know how this stuff works. But the reality is, if you're looking to buy a single family, especially right now, and especially if it's in the near towns to the city, chances are incredibly high there's going to be multiple offers. Okay. And I can tell you the person you lost that deal to is doing exactly what I'm recommending, which is go under contract, rush the appraisal. You'll have it back within 5 days before attorney review wraps. That way you know what the number is. And should you decide to walk away, you have that option. Okay. She says, I'm not sure I'm going to find anything. And a week and a half later, she's under contract. We're going to close on April 15th. Okay. The comfort call to the listing agent that Aaron's talking about makes an impact. When I'm having these conversations, I'm talking about, hey, this is a repeat client for us. We are not contingent on them selling their current home. They've been super responsive and engaged with my team. They've been great to work with. I want to help them into this place. All I need is a contract, an appraisal, and title, and we're off to the races. So having said all that, I'll ask, is there anything that you need to hear from us, or is there any reservation that you have before accepting our client's offer? And if I can speak to it, I'm happy to speak to it. This is the kind of stuff that helps our clients win. It helps you, our real estate partners, win, and it helps us win the business as well. So last but not least, we got 2 minutes before the top of the hour. Get us involved early. It's never too early to have a conversation. Our initial pre-approval is done off a soft pull. There should be very little objection or hesitancy to get Aaron or myself started, or anyone in our group started with a pre-approval conversation. Okay. It may take a client some time to get comfortable with things like contingencies, appraisal gaps. So get us involved early and we can help educate them in beginning that process. Again, we will send out the video of this call, the recap of the agenda, the invite for the reverse mortgage seminar virtual tomorrow at 1 p.m. Mr. Wise, anything you want to say before we bring it home here?
No, just doubling down. I think the hardest thing right now is conveying to your buyer how kind of fast and furious the market is. You know, and sometimes they got to see it and they got to lose one to kind of figure it out and get there. I call it learning through pain. That's probably not the nicest way to put it, but I think what we as a team have to do is when we're all in touch with our buyer is say, hey, listen, this thing can move fast. What you've got to do is you have got to huddle up. I always use goofy sports analogies, right? So you've got to huddle up before you get in the game and talk about all the permutations of what can happen, all the possibilities, get familiar with the terminology, just kind of get there mentally. And if you don't make a move in the next week, month, 6 months, that's okay. But I think what's happening is a lot of people go in this thing like, let's just see, we're not really sure. I had one this weekend. Our lease expires in July. We can get out of it early if we want. And then the agent sends me an email last night at 9 p.m. Hey, they've got one. They want to go check it out. Are we all ready to go? And the initial call on Saturday was, we have no idea what we're doing. We don't know what our budget is. Help us. We don't even know where to start. So we've gone from 0 to 60 in 24 hours, and they haven't even, really got me a W-2 yet. So the faster you can get to that point, I think the quicker you can get in the market and be serious about helping someone, versus the alternative, which I feel like it ends up being a little bit of a train wreck if it's not done in that order. So that's all I got.
I love it. Well,
Yep.
moving at the speed of real estate. So, Mr. Wise, thank you for co-piloting this morning. Everyone
Yes,
on the
sir.
call, thank you for joining us today. We'll get this recap and recording out to you. Don't keep us a secret. Let us know if we can help you or your clients, even if it's with another lender. We're not going to get the business. We will help you win and manage that lender. On behalf of Aaron Wise, this is John Mooney, Guaranty Rate Affinity. We will see you guys in 2 Mondays. Thanks for joining the call. See you next time.
Thanks, everybody.